Okay, welcome. It's now exactly 5:30 local time. So 4th of June 2018. This is pound yen on a 50-minute chart, trading around.
So, yeah, as we just heard from the Europeans, the UK are following suit as well. They're set to take safeguard
The 145.96 level.
UK market. These could be in place by mid-July, according to UK Trade Secretary Fox.
As some people know, it was not difficult to see that the smart money cartel would first take out the big counter stop accumulation on the upside, and once it did it, it was not difficult to predict that it would come down, going for this inner range stop accumulation of the dumb money longies. So what I'm trying to do now is I'm trying to record live how this stop accumulation is taken out. I have no clue how long this takes. It could take quite some minutes, of course. Doesn't need to come instantly, but apparently people were really keen on seeing that something like this live. So yeah, what will happen is the following. You always have to add the spread to the accumulation, okay? So in order to take out this accumulation, the smart money cartel would need to push the price down to the 145.791 level. This would be a complete stop run. You can see they already did the move. So that was the post counter stop run pre-target move. Okay, so this was taken out, and now they go for the main target. You also see that there's dumb money long activity. So basically, even though the price came up a lot, the dumb money got lured into buying the market, and so at expensive prices, and has their stops below the price. So we're talking about a collective, of course. It's a group of dumb money traders, and what will happen now is the main target run will be implemented. And while this happens, I will talk a bit about general principles, I guess. If you have bothered to look at my work, at my live trade videos, at my educational videos, at my screenshots, and so on and so on, you would understand what's going on in the foreign exchange market. Contrary to common beliefs, it's not driven by any supply or demand. Okay, that should be the first thing you really should realize by now. Many people have already, but many are still slow understanding that particular point. It is not the case that you have more supply and more demand than supply, the price go up, and vice versa. Okay, that's not the case. Instead, we have a cartel structure whereby there is a low number of so-called smart money players. They have complete price moving abilities, so they can move the price where they want. They do it in a highly efficient manner. They have certain principles they follow in order to keep that manipulation hidden. I have dedicated the best years of my life in uncovering these principles. I have done so on the basis of observation. Yeah, so my approach was observation first. So what is the market structure reality, and then conclusion second. So once you have seen what's going on, then you actually put it into a general principle and give it a name in order to make sense of all this. And you will not find this stuff anywhere else. There's no book whatsoever on this stuff. There's no video. There are certain people who understand the general principle, and they tend to have a lot of videos and talk about it, but I'm not aware of anyone who can actually show you the thing live on the chart, who has actually everything live in front of the eyes. Should also emphasize, many people got confused. This indicator here, it's some type of half trend indicator. It's irrelevant, okay? I do not use it in any way for trading, okay? These signals, the bullish, bearish modes, completely ignore them. The only reason I have this on my chart is to have some orientation. I look at around 12 screens at the same time normally, so This helps me to understand, okay, 30 minutes ago the price was around here, then the price was around there. Okay, it's completely irrelevant. So this blue-yellow indicator is irrelevant. I could take it off the charts without any issue. Yeah, but the only reason I have it on is to have some kind of visual point of orientation. Okay, that's all. So that, I have explained in other videos that there are different types of stop accumulations: long-term, short-term, medium-term. They all have their own implications. I have talked a bit about dynamics specifically related to each of these different types of stop accumulations. I've talked a bit about dumb money positions, their meaning, the relevance. I have talked a bit about short-term games which you can observe every day, such as fake support, fake resistance, fake pins, house cleaning, all these kind of things. I have done another video where I explained the big picture again, taking a step back, showing you official documents confirming the manipulation happening. I've done a lot of things. It's all out there, and there's enough material for you to look at and understand what's going on in the market. Okay. So yeah, again, you know, all this didn't fall from the sky. You know, I didn't have those insights coming to my head randomly. Yeah, this is a basis of screen time. I've invested thousands and thousands of hours into screen time looking at the actual market mechanics. Okay, and I uncovered these, and I put everything into a structured, understandable lingo. Okay, and diagram, so to speak. Yeah. And there are many things I didn't show at all. There are many things. There are meta levels. I didn't show them. There are, for example, 4-hour chart dynamics. There is dumb money tolerance. There's a lot of things I didn't even mention. And of course, you need to be aware of everything like that. Yeah. Never ever attempt to fly a jet fighter on the basis of a one-page manual. Okay, it won't end well. Forget about that. No? The mechanics are complex. They are not rocket science. Yes, so I'm able to make you understand, I would say, but it's not simplistic neither. Okay, it just doesn't work. Some people think you can just trade towards stops and so on. Forget that. It doesn't work. Okay, and I'm actually able to show you why this doesn't work. Okay. Now, what I try to do is show you the different pillars, and then at some point maybe showing you the bigger picture, and then you will understand the whole thing, how it all fits together, how they do what they do. The no easy money principle applied. Their attempts to actually maintain some kind of economic plausibility, you know. And I should also say, you know, in all fairness, I mean, yes, what these guys do, it is highly illegal. You know, they move the price against big groups of traders. This is not legal. Yeah, nobody can move the prices except them. There we go. It's coming. You see. But think about it. If they wouldn't do that, if they wouldn't have any ability to move the price, who would actually offer you to buy or sell whenever you want, whatever you want, how much, and at those cheap prices? You know, some people would answer, well, you know, they hedge themselves. Not that easy. There are no perfect hedges. So by allowing you to click the buy or sell button, they actually first give you an advantage. But the reality is, of course, they have control over what's happening next to the market. Otherwise, they wouldn't do it. So the reason why transaction costs are so low, the reason why FX markets are so liquid and so deep, is that kind of manipulation. You know. And another thing I emphasize once more: on the dark money side, you have big groups of traders who are not placing orders in order to make a profit. They're not speculating. This is another thing nobody understands. The main groups are players such as corporates. They hedge themselves against currency risks. That means, for example, a big company, let's say a German company, gets income in dollars because it sells to the US, and then they want to switch into euros. So they need to place trades in the market in order to make sure that no matter what happens to euro dollar, their business is not affected in a big way. This is what they book on their accounting under hedging activities. But, as I said before, if they would make an analysis over 10, 15, 20 years, they would realize that overall they lost. Yeah, there will be some years where they, by accident, made money on the hedges, so they believe, okay, it's actually fair, it's random. But I tell you, if you would take a big sample of those guys and make this analysis, suggest some academics to maybe look into this, you will see that the hedging is not a zero-sum game. They lose overall, you know, as a group. Okay, and as I've explained before, okay, you can have the pre-run counter move. Okay, this is the base case. Remember, the smart money cartel always tries to cover as much range as possible and to delay the whole thing. There is no rush at all. And if stop accumulations are pulled away, they're not running after them, you know? They are actually going the other way. I showed that before, okay, in another explanation. These are very important things for you to understand, okay? You don't get this knowledge anywhere. Most books on the subject are completely misleading and incorrect. And most other material you find. You know, look, I'm somebody who's against those kind of people who try to sell you cheap indicators, who try to sell you systems, who try to sell you coaching and these education sites and all these kind of websites, you know, where people only have the interest to make you trade, to pay some broker a commission, and then many retail brokers that just want to churn you anyways, you see. I've shown that in other videos as well. I've demonstrated and explained the broker manipulation of the slippage of the spread of the price itself, okay? Look at my stuff. It's all in front of your eyes, okay? Don't tell me that nobody made you aware of these things. And let's get back to one of the basic facts. Yeah, nobody argues that more than 95% of market participants lose. Now that fact should really make you think, how can this be? If the likelihood would be 50-50 whether the price goes up or down, the rate should be much higher than 95%.
Sound check.
So that as such is already mind-boggling. And I could show you actually something else where you would understand how the smart money cartel does it.
The most credible explanation that I've seen is someone suggesting that the news has coincided with the news that the UK government would reduce its stake in RBS from around 70% to about 64.5%. And some had suggested that they would like to see that stake cut by around 10%. Again, I'm not tying these moves together, but that was the news flow that was crossing around about the sort of time.
This stuff is all noise, you know? The information you hear on the news, it's all noise at the end of the day. And the algos, they use it in order to implement their market manipulation. Yeah? They use it in order to make most people lose. And the fascinating thing is, as I said before, it doesn't matter whether the money bought or sold, whether they're long or short, whether they trade any kinds of systems, trend following, reversals, breakouts, scalping, whatever it is. You know, they will make sure, the smart money algos, that overall these groups will lose, okay? And you know, if you are somebody who tried trading and you can't point your finger at it, but you kind of feel that something is wrong. You feel that it's not really random. Sometimes the market does those weird moves, it breaks out in one direction, it turns exactly at one price, and then it goes flat, it whipsaws. You know, you feel that something is going on, which you know is intended. And this makes you also more open to general conspiracy theories. But you don't need to be a conspiracy nut to believe in that. This is, you know, money against money, and this is the mechanism, the system, making sure that the smart money cartel with price moving abilities wins and makes a fortune every single day, while everybody else on the price taking side loses. Okay, that's a shocking reality. And as a retail trader, for example, you are at the end of the food chain, okay? So you come there, you don't have any relationship to any broker, you get very bad spreads, very high commissions, and very bad prices, and what happens is the retail broker will take the opposite position of you. You have different trading books, and they'll put you in another trading book. And most of the time you will just do the wrong thing, you will most likely over leverage, and you will lose, and they win. And this is of course not fair, but that's the reality in the market, okay? So you get exploited by the retail broker doing all kinds of games against you. I mean, look at all the links. Look at the software which is offered to brokers. You can Google it. You can see the software brokers use in order to, you know, basically do all kinds of tricks. This is a legal gray zone. You know, if some people complain on a case-by-case basis to the regulator, after some years of discovery, then, you know, maybe they may be awarded some reparation or whatever, but most people don't do it. So remember, if you go to a retail broker without any relations, you just open an account. Okay, you're already at the end of the food chain. The odds are all against you. You are a victim of the broker manipulation. You are a victim of the market maker manipulation.
That we've just seen is
you are paying spread and commissions rather than receiving it.
Just crossing other news wires as well at the moment.
And then on top of all that, you have all the other problems. Okay, I didn't even start talking about trading psychology and emotions. All these things come on top. This is why the game is difficult, you know? Because then, you know, most people have a tendency to be influenced by greed and fear. You know? But let's leave that stuff out of the equation for now. You know, even with a perfect mindset and perfect emotions, etc., you will have issues. You know, there are system-destroying dynamics in that kind of manipulation. Okay, they know their stuff. They have done their homework. You understand? So yeah, I think that's enough for now. This monologue. Not keen on making this video too long. But yeah, I mean, you understand. So trading psychology, leverage, yeah, the ability to not leverage too much, etc. This all comes on top of that, and then you have this whole range of other issues. I also discuss in other videos. Yeah, we're talking about things like indicators that can be repainting or lagging or whipsawing. Okay, all these problems come on top of that. So understand it. Okay, like this is the reason why people lose. And the funny thing is they tend to be too simplistic. They say, oh, it's because I'm too greedy and this and that. No, maybe you're not.
Talking Venezuela, it must return to
maybe, you know, your mindset is not great, but okay. But you're just, again, a victim of all this stuff here I'm showing to you. Okay? And many of the principles I uncovered are counterintuitive. So normally you would think, okay, stop accumulation, it's a target, price goes there or something. No, it's not that easy. If it's a big one, it goes first the opposite, cleaning out the other side, the guys who are placed correctly, the guys who have tight stops, the guys who try to do intraday trade and that stuff. And then once they did it, and took out the main targets, then they slowly turn in the other direction. And remember, they achieve different things at the same time. They lure new guys into the market. For example, look, by actually doing the counter run up, buyers are encouraged to enter. They think it's a breakout of their high or something. You see, that's the reason why these guys come there. They got lured into buying expensive into the market, just, you know, to be caught into this main target run. You understand? There's a reason why these guys suddenly bought. They think, oh, the high is broken, the buy, breakout. And then boom, goes down, you know, and catches all the guys, and especially the guys who try to buy the breakout thinking, okay, high risk reward ratio, so high reward risk ratio, so I buy, I make a tight stop, either I make 3 times the loss or I get stopped out, and then 80% of the time they get stopped out, and then they think, oh, wait a second. So it's not that easy, and as a general rule in the short term, the smart indicator does not allow for good risk reward relationships. Be aware of that, okay? So if you're trying to always implement good risk reward, then your win-loss ratio won't be great. Okay, and if you try to go for a good win-loss ratio, then your risk reward won't be great, because, for example, your stop on average is proportionally speaking further away than the take profit. These are things you need to understand and you need to solve in order to have a system that has any chance of profit. Okay. For example, when it comes to automated systems and these things, these are the main factors which are relevant, and I have talked about this in other videos as well. Okay. So yeah, I have done a lot to make these things understandable, and more people, they get it, which is good. You know, I get a lot of positive feedback these days. Very thankful for this. Yes, people are saying thanks, I understand what you mean. Yeah, and they get it, so that's great. And I have not shown everything. No, I didn't, but I've shown something already. So this should make you think. You know, this should be a proof to you that you're basically starting out with all the odds against you. So what's the conclusion? The conclusion is respect the game. The last thing you should do is take huge risks to balance losers. No, don't. In this game here, you need maximum discipline. It is hard. This is one of the hardest activities in this world. Yeah, short-term trading. It is very difficult because of all the things I've just explained to you. You need to find a way to counter all these tricks. There are ways, yes, but it will take you years and years of doing proper work. You know, I'm talking research, I'm talking testing. You understand? It doesn't, you know, it's not that easy that you sit down. You know, stay away from these sites like, you know, this internet sites selling you those indicators. They show you screenshots. Yeah, like an indicator like this. Look, they don't show you that. They show you this here, this day. And you say, oh, come on, how difficult can it be? I sell, I buy, I sell, I buy. Okay, here's a loser, but here I made 4 times the profit. And then these guys say, don't show you this day, where whipsaw it, boom, 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 lost, 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 lost. You understand? That's a problem. You know, they are not honest. They cherry pick their screenshots. So forget it. You're like, I can tell you in general, you will not be able to trade in a profitable manner just by following indicators like this. Forget that. These days are over a long time ago. You know, you need to step up your game. Yeah, on all areas. I mean, I'm talking about technology. I'm talking about the degree of complexity, adaptiveness, etc. But I don't want to discuss everything in one go. You know, this is maybe content for another video, I guess. And yeah, look here, we have a nice accumulation. So of course this will be cleaned, no question. This level will be cleaned, and you can see this pin, it already took out this price target. You see, it's just half a pip away. And remember also what I said regarding counter moves, okay? Remember that, for example, the smart money likes to do a pre-run counter move, okay? Here, for example, when there's a plateau, you see, and there are stop accumulations at the plateau, the smart money algos love to clean the plateau first before going for the run. This creates all this ranging price action, you see? This is the reason why they do this ranging price action. Anyways, I maybe do something like this in the future again. I don't know, maybe not. But I'm only talking here 23 minutes, so don't want to make the file too big. So guys, all in all, I can only recommend stay safe. You know, do your homework. Do not show up with a knife to a gunfight. All the best, guys.